Good afternoon. It's Jeffrey Christian of CPM Group. It's about 12:25 in the afternoon here in New York on Tuesday, the 18th of November. I want to talk about central bank gold activity. There's been a couple articles in the Financial Times in October and in last Friday about central bank gold purchases and the prospect that some of the estimates of very high and large unreported gold purchases by central banks, in fact, are inaccurate. And so that has gotten a lot of people talking about central banks. It's a good time to update our what's really going on in the central bank area and address that. In order to do that, I'm also going to put out a couple historical central bank actions that are somewhat relevant to what's going on today, partly to memorialize these things and partly because they are indicative of the way central banks and governments behave with gold. First, let's talk about the markets. Gold prices have continued to be volatile at very high levels. If you went back to last week, you saw gold break over $4,200. We were talking among ourselves, was this the beginning of a breakout to the upside? We decided that it wasn't, and that there was still downside potential as the U.S. government reopened, given an enormous scope of economic and political issues, both within the United States on a global basis. So we continue to hold our ultra short-term trading recommendation as a stand aside, expecting that prices could rise sharply and fall sharply in the near term, in the ultra short-term basis. Gold prices, in fact, have fallen more than $200 since last week. They broke below $4,000 this morning. They only got down to about $3,997, which is in sharp contrast to silver, which I'll talk about in a second. And they're back up around $4,060 right now. Our expectation is that the price remains vulnerable to the downside. $3,900 is not out of the question. $3,800 is not out of the question in the short term. Longer term, we still think that given all of the economic and political and financial and social problems within the United States and on a global basis around the world, probably gold will continue to rise in the longer term beyond the next couple of weeks. And our expectation is that prices ultimately will take out $4,400, the price that they almost achieved last month. Silver prices got over $54 last week. They've come down. They broke below $50 this morning, got all the way down to like $49.11 or so, which is a sharper decline or a more prominent decline below $50 than the gold price dropping below $4,000. Prices come back up. It's trading above $50 right now, probably around $50.50 as we speak. Very similar outlook to what we have for gold, which is that the silver price does remain vulnerable to the downside, possibly not this week or next week, but possibly in the first couple of weeks of December. Same timing applies to gold, by the way. But that in the longer term, we do think that the silver price will continue to rise. Platinum and palladium are more industrial metals in our view, and the prices have risen, and there has been some downside. Our expectation is that over the next couple of weeks, the Bureau, the Trump administration said, well, maybe we just won't publish all that data, all the economic data that was not released during the government shutdown, which I think they would like, because a lot of the data is probably going to show economic weakness and higher inflation. But the Bureau of Labor Statistics, the Bureau of Economic Analysis, and the Census Bureau have all said, no, we're going to collect and update that data, and we will be releasing it as we have it. So it's coming. Our expectation is that a lot of the data, as I said, will show economic weakness. rising unemployment, declining employment growth, and higher inflation in a number of sectors. And that may weigh on more industrial metals like platinum and palladium. So our expectation is that while the platinum and palladium prices have been hovering around recent highs, our expectation is that they could come down. Platinum before December, in the first couple weeks of December for both of them. So platinum prices, we wouldn't be surprised to see it go back down and test 1,300 and possibly move below that significantly. And palladium, we wouldn't be surprised to see it come back down to around $1,200 or maybe even lower in the near term. Now, turning to central banks, I want to first talk about what's been going on recently. These are tables that appear in our monthly precious metals advisory, and these are the tables that were there in our November 6th precious metals advisory. On the left-hand side, you see the 22 or 23 countries that have added gold to their monetary reserves so far this year through September in the first 3 quarters. And there's about 8.3 million ounces cumulative across those almost 24 countries. You have about half as many countries that actually have been selling, and they've sold about 2.5 million ounces over the course of the year. Russia has been flipping back and forth, and it's the major source of sales. They have been using their gold reserves to finance the government and the war effort. It's very important, I'll point it out here when I get into the historic facts. The central bank's gold has been being used to finance the government and the war effort. There are other gold assets within the Russian government that don't appear to be being sold to finance the war effort. And I think that's very significant for a variety of political reasons. But 2.5 million ounces of sales cumulatively through September, subtotal of net changes in the first 3 quarters, about 5.8 million ounces. That annualizes to about 7.8 million ounces or so. That's what's going on. Now, there have been talks about unreported inventory purchases. And here's a chart which basically shows the monthly gross additions, gross reductions, and the black line is the net. Central banks used to be very secretive about their gold policies. They aren't anymore. There was an impulse and there was a lot of discussion. It's not just gold policy, it's overall central bank policies. It used to be much more secretive. Prior to Paul Volcker and Alan Greenspan, the U.S. Federal Reserve did not broadcast its economic views and broadcast its ideas about whether or not it would be raising or lowering interest rates or purchasing more or fewer treasuries. They were very secretive, as were other central banks, not just with their gold purchases and disposals, but also with other policies. Paul Volcker and Alan Greenspan started changing that in the United States, and other central banks around the world also started adding to it. Over the course of the 90s, as there was a run-up to the creation and initiation of the European Central Bank, there was a lot of discussion in Europe about increasing transparencies. And one of the things that came up was that if a central bank was going to make a major change to its monetary reserve policies, and it was in the ECB network, the Euro network, it needed to advise the ECB ahead of time. So there was this view that the secrecy, where central banks could sell gold, and they used various mechanisms to keep it secret or to hide it or to delay the notification that they had sold their gold. All of that was going to go away as of January 1st, 1999. There were various central bankers who were very much in favor of increasing the transparency. In that period of secrecy, there were all sorts of rumors that were floated by people and bullion banks and others about, well, this central bank is selling and this central bank is selling. And the central banks actually were very upset that they were the butt of these rumors, and they were being used, rumors about their purchases or sales were being used to try to influence the gold price. So there was an impulse to increase transparency, not just with gold transactions, but across the board. And there were a series of government, intergovernment, intra-central bank monetary authority agreements, international agreements, starting in the late 1990s, 1999 or so, and continuing into about 2013, 2015. There were a number of agreements that central banks signed off on to increase their transparency, to report on a monthly basis more accurately and honestly what their monetary reserve asset changes had been, including gold and including currencies. It wasn't just gold, but it was across the board. And from what can be told, these were agreements that were organized through the Bank for International Settlements, the International Monetary Fund, and virtually all central banks signed off on those. And from what can be told, seen, and determined, most central banks continue to abide by these international agreements that they have agreed upon. So the idea of large, unreported, secret purchases kind of flies in the face of what central banks and the IMF and the BIS say is going on. And you can believe the international central banking system, or you can believe people who promote precious metals purchases by investors. It's really the way you want to go. Now, you can see here the past few years, central banks have been buying gold. They bought less in 2024 and 2025 than they did in 2022 and 2023. They bought less because the price is higher, primarily. Central banks, like many investors, don't say, I want to buy X ounces of gold. They say, I want to put X percent of my monetary reserves in gold. And that X percent is the value of monetary reserves, which are basically valued in US dollars. So as the gold price has gone from $1,000 or $1,500 in 2022 to, well, I got down to 1640 in 2022. It was 1640 in November of 2022. And as it rose to $2,600 at the beginning of this year, and then even further this year, central banks have been buying fewer ounces of gold. They also are, in fact, lowering the value of the gold they're buying too, waiting for bargain prices or more bargain prices. It used to be, if you go back to 2022 as an example, central banks were buying gold in 2016, 17, 18, and the first half of 19 at prices between $1,200 and $1,350. When the price broke above $1,350 in the middle of 2019, several central banks, including the People's Bank of China, which is the butt of a lot of the current rumors, several central banks stopped buying. And the People's Bank of China and other central banks did not buy from $1,350 all the way up to $2,000. Record $2,060, I believe, in early 2022, about the time Russia invaded Ukraine. There was a lot of buying by investors, driving those prices higher. Central banks actually pulled back. And what you saw was that many central banks were not buying in that period from the second half of 2019 into late 2022. Over the course of 2022, the price of gold went from $2,040 in the first quarter. $2,060 was the intraday high, I believe, or settlement daily settlement price high. It went from $2,060 in the first quarter of 2022 to $1,620, $1,640 in early November. At $1,620, $1,640, central banks began buying again. And very importantly, they began reporting that they were buying again. During that period from the middle of 2019 into November of 2022, there were various people who were trying to promote gold to investors who kept saying, well, the People's Bank of China has stopped reporting its gold purchases, but we assume that they're continuing to buy vast amounts of gold as the price rises from 1,300 to 2,060. They didn't. They waited, and when the price got to 1,640, they said, okay, this isn't 1,350, but it's possibly a cyclical low, and we're starting to see other people beginning to buy. During that period of time, from the first quarter of 2022 to the fourth quarter of 2022, when the gold price went from $2,060 to $1,620, other people were selling. And in fact, there was a lot of gold sold in China by private entities and other groups that did not find a ready home, that was sloshing around the market, depressing the price. The price fell 20% over the course of 9 months, right? And after it had fallen 20%, and by the time we got into late 2022, not only central banks, but other groups felt that, hey, the price is off 20% from its high 9 months ago. Let's start buying again. And they bought a lot of gold, maybe about 10, 11 million ounces in 2022, mostly in the last 2 months of the year. And they bought about 14 million ounces, 15 million ounces in 2023. In 2024, they probably bought about 8.8 million ounces, more than half as much as they had bought in 2023. And this year, as I said, their annualized purchases through September probably are around 7.8 million ounces. Central banks don't like to overpay for the gold, so they'll buy on dips, and it's there. Now, central banks also do other things with gold. One of the things is many central banks around the world are national market makers. So if you're a producer or a refiner or an investment group and you want to sell gold in your country, you sell it through the central bank and the central bank banking network. And if you're a jeweler or an investor group and you want to buy gold, you buy it through the central bank. So central banks can be seen as buying and selling gold for third parties. And that often confuses people. And some central banks also trade gold on a shorter term basis. Usually they don't use their monetary reserves, but they'll trade back and forth to have some capital appreciation. And in 2022, you saw about 10 million ounces of gold on a net basis sold by Chinese entities other than the People's Bank of China that could not find a ready home within China. Now, the Chinese central bank the Chinese government has a policy. The gold in China stays in China. That's one of the reasons why China will never agree to a gold-backed BRICS currency system. They don't want to use their gold to pay for imports. They want to use their dollars and other currencies. Right. So you saw about 10 million ounces come into the Chinese market as the gold price fell 20%, and there weren't ready homes for that. So it went into the side bucket that the People's Bank of China had. Now, the People's Bank of China used to be the market maker for gold and silver within China. They got out of that business in 2000, 2002. But they kept their trading desk because it was one of the best trading desks in the world. And they kept that trading desk to provide trading services, purchases, and sales to private and government Chinese groups that were buying and selling gold and silver. And you had this buildup in that side bucket of about 10 million ounces. Some people heard about that and assumed that those were official purchases for monetary reserves. They were not. And over the course of the next year, that gold was sold off. As the price started rising again in 2023, that gold was bought. It was bought by private groups. It was bought by other government agencies. And a significant amount of it was bought by the People's Bank of China, reported as monthly purchases for addition to their monetary reserves. Now, if you counted that 10 million ounces in the side bucket as a purchase in 2022, and then you counted the monthly purchases, 1 million ounces this month, 1.4 million ounces this month. We've shown you charts with monthly charter Chinese central bank purchases and additions to their monetary reserves. You can go back to old videos on CPM Group, from CPM Group, and see the Russian monthly transactions in Central Bank of Russia and the People's Bank of China. We published that, and we've given it away for free in videos for anybody who wants to look at it. If you counted that 10 million ounces that went into the side bucket, the trading account, and then you count it again as the central bank buys it over the ensuing 15 months, you're double counting it. Yeah. So there's a lot of weird stuff that goes on there. Now, I already talked a long time. I want to run through a couple stories about central banks, and we were talking about this and whether or not this is wise. I'm going to be breaking some confidences. First thing I want to do is talk about Soviet gold reserves. CPM Group used to estimate in the 1980s that the Soviet Union had about 68 million ounces of gold reserves. Well, it varied over time. It peaked out around 80 million ounces in the early 80s. It came down, and it was probably around, by our estimate, about 68 million ounces around 1988, 1990, as the Soviet Union was crumbling and moving toward dissolution. I have the numbers here. In October 1991, the IMF joined, the Soviet Union joined the IMF. And it did that because it could get international loans from the IMF to try to support the country, which as it was falling apart. And they were talking about moving toward joining the IMF over the course of 1991. We happened to be trading with the Soviet government, not trading directly, but we provided research and consulting services with them. And at some point over that course, up until October 1991, they said, we're going to be joining the IMF. And once you join the IMF, you have to report your monetary reserves, currencies, and gold. And we will be reporting that we have 12.9 million ounces. I said, wow, we had estimated that you have 68 million ounces. But I understand 12.9 because when the Chinese, mainland China joined the IMF in 1980, I believe it was, they said they had 12.3 million ounces of reserves. And they did at that time have 12.3 million ounces of monetary reserves of gold. So Russia came along 11 years later and, wow, we have more gold in our monetary reserves than China. I said, we thought you had 68 million ounces. The Soviet government people that we worked with said, we're reporting monetary reserves of gold. There may be, don't stop publishing your estimates, because there may be large amounts of gold that are held by other parts of the Soviet government. But these are the monetary reserves. Just because our monetary reserves are 12.9 million ounces doesn't mean that the Soviet government in total has about 68 million ounces of gold. This was 1991. Soviet Union dissolved in December of 1991. The Russian Federation joined the IMF in 1992, June of 1992. Other former Soviet republics and governments also joined the IMF. in the dissolution and the creation of the Commonwealth of Independent States, those other republics said, hey, we want our share of the Soviet Union's gold. The Central Bank of Russia said, okay, 12.9 million ounces on a pro-rata basis. This is how each of the 15 republics get gold. The Ukraine government said, well, wait, we understand from this report that we see that there's about 68 million ounces of gold within the Soviet Union government holdings. So we want our share of 68 million ounces, not 12.9. And the Russian central bank said, we're giving you your share on a pro rata basis of the monetary reserves. If you want your share of the other gold, go talk to the Red Army. It's interesting because that gold's out there. The other story I want to talk about is the Bank of England, and they sold. They had about 20 million ounces of gold, and in 1999 they announced that they were going to sell about half of it, about 10 million ounces, over a 5-year period through public auctions. And this was part of that whole issue of transparency. We don't want bankers and other people saying, oh, UK is selling all of its gold. We're going to tell you we're selling exactly 10 million ounces, and we're selling it over this period of time in public auctions where we will tell you how many ounces were bid for and how many ounces we sold in those public auctions. Very transparent, right? And they sold that gold from 1999 into 2000. I have some notes that I pulled together. 2004. Gordon Brown continues to be vilified as the Chancellor of the Exchequer who sold off half of the gold that the Bank of England had at prices between $260 and by 2004 the price was probably around $400 or $500. The decision to sell that gold was not the decision of the Exchequer. It was a decision made by the Bank of England, which studied that idea from around 1988 into around 1993. The Bank of England made that decision, but they were opting out of the ECB and the euro. After they initially were going to join the euro, but after the currency crisis in Europe, late 1992, early 1993, they decided that they would not join the euro system and the ECB. And they made a decision that they would wait until after January 1st, 1999 to sell their gold. The Swiss National Bank had similarly, at that same time frame, said they wanted to sell at least half of the 86 million ounces that they had. But they would wait until 1999 to start public auctions and sales, because any central bank in Europe that was opting into the euro system and the European Central Bank had to, they could sell gold after January 1st, 1999, but they had to report it to the ECB. It had to go into the minutes of the ECB's meetings. It would be reported in public that, hey, we're going to sell gold. If you sold the gold before January 1st, 1999, you weren't part of the ECB. The ECB didn't exist. You could sell it secretly using all those really cute mechanisms that central banks used to sell that gold. Right? So the European governments and central banks that were opting into the ECB had until January 1st to sell the gold they wanted to sell. Some sold none, some sold half of what they had, some sold less than half of what they had. We've got all the numbers. Swiss National Bank, the Bank of England, said, we're going to be very gentlemanly, and we're waiting until you've sold your gold, because you have a deadline, And we will start selling our gold in 1999, which both of them did. The decision to dispose of half of the gold at the Bank of England was made in that period, 1988, 1993. Gordon Brown became Chancellor of the Exchequer in May of 1997, and he was in that position until 2007. That decision was put in place 5 years before he became Chancellor of the Exchequer by the Bank of England. Right? He fell on the sword like being a proper British parliamentarian, politician. He did the correct thing, and he never said, no, it wasn't my decision. I was just implementing a decision made by my predecessors. A couple tales from the crypt of central bank activity. That's all I have for now. Sorry if I ran a little bit long, but now that stuff is on the internet and it's there for posterity. You can go to our website. You can buy our gold yearbook, platinum yearbook, silver yearbook, subscribe to our monthly precious metals advisory, see other services that we have, consulting services, asset management, commodity management services. You can send us a note at info@cpmgroup.com and say, I'd like to talk to you guys. If you found some of this historic information of interest, we have it in our database. We provide it to clients for a fee. That's all I have for now. Take care. Take care of yourself. Take care of those around you. Try to do something good for the world, and we'll talk to you later in the week.